Hello everybody and welcome back to week 5 of Dividend Investing. We're currently sitting at 526 portfolio value with 500 invested and a weekly change of negative $4.06. Previous weeks we were doing pretty good, so finally hitting a negative on the 5th week is expected, and it's a little more realistic now. 4 changes for this week. We've gone ahead and sold our Zim shares because they have not projected any earnings currently. We'll probably end up buying in when they do start projecting earnings again with dividend payouts. And then for the 2 new stocks we did, we have TRML and MO. MO was recommended to me by one of the comments on the last video, so I appreciate the suggestion. It is only about 9%, I would say, in dividend returns. Let me see here. But it is a new industry that we can look at for consumer defensive, so that does help us a little bit for increasing our industry lists, so to speak. You can see our total portfolio is relatively even at the moment. We do have PSEC kind of on the lower end, so we'll probably end up investing more next time around. With the Zim shares that I sold, I actually invested these into ORC and ARR, so these values have increased a little bit because of that. So you can see like a $50 jump here, and then a like a $10, $12 jump here. And then we also have our $70 jump here from the investment of the $100 a week. Overall, we're still doing pretty good. Let's go ahead and head to our stonks tab, cleared out the Zim line, and we'll add another stock as time progresses. You can see everything here. We're at a 5% profit from total invested amount to profits comparison, which isn't bad for a month and a week. So, because if we consistently do this every month, then that would be what, 50% profits for the year, which would be nuts. So I'm not at all expecting that, but it's still something to keep into consideration. ORC has jumped from 12 to 14 shares. AR has jumped from, I believe, 2 shares to 4.8 shares. SCHD, AGNC are all the same. PSEC, PBR are the same, USI are the same, and then TRML and MO have increased by 1 and 2 shares. And you can see that with TRML, that's already gone down a little bit since we've invested. Wow, total of 10% since I invested. I bought this literally yesterday, so that's kind of wild actually. But they do have a 84.94% yield at this time. That could be changing if they stop doing dividend investments, which is probably why this actually went down. We might have to end up selling. But for the time being, we do have some in healthcare and consumer defensive for our industry, so that has increased those chunks. And then we'll have to find a new one for the industrial side because we sold Zim and we no longer have it. Our real estate portion has increased a little bit. We're now sitting at 56% with AGNC, ORC, ARR taking the lead on that. Oh, and O. And of course, these two are still high-yielding stocks that are helping us out a little bit. Oh, we should probably be doing USOI as well. That being said, so I have everything here. That's kind of it for the stock side of things. I do want to go jump into the Robinhood portfolio so you guys can actually see the values. These are the total returns on all of these. Let me see. Show also my equity in it so you can see 104.83. Of course, these values might be a little bit different than what I have on the Google Sheet because they're constantly updating. So that's that. I do want to show you, because we're towards the end of the video here, our dividend payments, because those are coming out soon. So here, let's go ahead and go to dividends, search. We actually have one confirmed dividend for tomorrow, November 29th, from ARR. They're going to be paying 89 cents on the 2.2 shares that we had invested initially. 40 cents per share for a total of 89, which is awesome. This is going to be our first actual dividend payment, and then we got 3 more in February and March, but those are a little bit away, obviously. So, but that's still $2 whole so far that we've earned in dividend stock payments, and these will automatically be reinvested. So for the next week, we'll see an increase in our ARR share value. So the number of shares will increase a little bit, but my cost will not increase because I didn't put any more money in. It automatically grew by itself, right? So this is where we're going to see real portfolio growth overall is going to be from dividend investing, because the stocks are going to roughly stay the same or stay within like a $10 range. Some of them might grow, some of them might shrink, but for the most part, dividends don't change that much over the years. Sometimes they do, sometimes they don't. But like I said, the biggest moneymaker here is going to be them increasing from the dividends that are actually getting reinvested in. And since I'm not actually using money from my bank account to buy those dividends, those shares, that's where the actual increase will come. So that's already going to be a $2 jump, which is going to bring us to $28 in profits. And then here, let me do that. If we did like 28 here, we would see 5.6. So it would be a 0.3% jump already from that. So that's kind of cool to see. And I think that's going to be it for this episode. If you enjoyed, comment, like, subscribe for more. Hope to see you all in week 6. Adios. Have a fantabulous day. Peace.